You have to know these 3 reversal patterns. 2 of them are classics, and 1 is an extra that's my personal favorite. Today I'm going to break down all 3 patterns to help give you a real edge in your trading. These patterns aren't magical, but they are statistically likely to help you spot reversals and profitably trade them. Let's do it. First is double tops and double bottoms. These are pretty straightforward. What you're looking for is 2 peaks in the market where price tried to hit a certain level, recovered, and tried again. You could also see the opposite, a double bottom, where price fell, hit a certain point, recovered, hit a certain point again, and is starting to recover. We can see there's a lot of back and forth with buyers and sellers trying to figure out where price should go. Oftentimes you'll notice that that second peak is a little weaker, and that's a great signal. You might see that that second peak doesn't quite hit as low, maybe it's wickier and you're seeing a lot more wicks go down. All these are great signs. That means that price made a strong move, recovered, and it's testing out that level again before going the opposite way. And remember, these can be bullish or bearish. They can be mountains or valleys. If you're trying to figure out where to enter on these, the usual advice is on that second peak, if price goes down below the middle support, that would be your entry. That would tell us this has really formed into a classic double top or double bottom. Next up, another classic, really strong signal to see is head and shoulders. So kind of similar to a double top, but instead of 2 tops, you're gonna see a top, a bigger top, and then another top. And then it's gonna reverse, hopefully. Head and shoulders. So instead of 2 peaks, we have 3 peaks, and the center one is quite a bit bigger. What this shows us is that price started to rally, recovered a little bit, rallied really strongly, and then that third rally is usually about where that first rally was. This is a really good reversal sign the same way. So the same way with double tops and double bottoms, this can also be bullish or bearish. You can have a head and shoulders or an inverse head and shoulders. Also, same tip with double tops and double bottoms. If you see that that last shoulder is kind of weak, like it didn't hit quite as high as the first shoulder, or it's very wicky, that's another great sign. That would really tell you that the trend is weakening and you're looking great for a reversal. For your entry, we'd be looking for what we call a neckline break. So once price has started to descend from that last shoulder, we've identified the pattern and we would enter there and hopefully have a really profitable trade. Okay, I promised it. Here's your bonus. It's called the Hedgehog Pattern. You might try and Google this and be like, Hedgehog Pattern, that's not a thing. It's because I made it up. That's my name for it. I think it's a cute name. All the Hedgehog Pattern is a strong move up and then a lot of wicks all in a row. You'll see 3 or 4 wicks pointing up, all going to about the same level. These are kind of similar to tweezer tops or tweezer bottoms that I talked about in my last video, but there's just more of them. And it's a stronger sign that the market has really hit a lot of resistance. This could just be consolidation before the move continues up, but in my experience, this often is a sign of a reversal. If you want to try to trade this pattern as a reversal, look at the lows of these wicky candles in the center that are making these hedgehog spikes. Put your entry right below those. Same thing as before, this can be bullish or bearish. The hedgehog can be right set up, or he can be on his back. So in previous videos, I talked about candlestick basics, basic candlestick types, some really simple 2 candle formations. These are more complicated. These candlestick patterns are gonna take a lot longer to play out, so you're gonna have to be patient. But that's a really good thing. In my experience, it's far more valuable to be patient and maybe miss a trade than to jump in too early and lose a lot more often. And also remember, these aren't accurate all the time. They're statistically likely, but sometimes something you think is gonna develop into a double top doesn't. You think it's about to reverse and it just keeps going. It was a pullback. This is normal, you're gonna get caught out, but you'll get better and better at identifying these and hopefully have fewer losing trades. If you couple identifying these patterns with identifying levels of support and resistance and other contextual factors, you can have a lot of success trading these. So try and find these on your charts. And similar to my advice from the last video, find examples where these were really clear and did exactly what you expected, and find some examples where it looked like a double top was forming and it didn't reverse. It just kept going. Find examples of a hedgehog pattern where it kept going. It was consolidation and the market continued. These patterns are statistically likely to result in reversals, but it's not 100%. I hope you enjoyed this video, I hope it brought you some value, and I hope it explained some more advanced reversal patterns for you. I only talked about a few patterns here. If there are others that you think are better, let me know in the comments. If you enjoyed this video, I'd love it if you could like and subscribe. If you hated this video, comment and tell me why, and I'll keep trying. Either way, my name's Andrew, and I'll see you around.